Hello and welcome. My name's Rebecca Collins, Research Manager for MLC. Today I'm joined by Chief Investment Officer Jonathan Armitage. Thanks for joining us, Jonathan.
Thank you.
It's been a wild ride for investors coming into October. What's behind the recent market volatility?
I think, as always, there are a couple of reasons. There's never sort of one very sort of strong driver to market volatility. So I think what we're seeing is one of the sort of factors that's been going on for really for some time now is the withdrawal of liquidity as central banks look to normalise monetary policy. We're seeing that in the US and also sort of seeing it follow through in markets like the UK and also Europe. And some estimates have suggested that nearly $500 billion have been removed from monetary stimulus really since March this year. What we're also seeing is that forward earnings estimates are coming under a little bit of pressure, particularly in markets in the US. It's been an extraordinary period for earnings growth for corporate profits in the US. And I think what you're seeing is markets and investors reappraising what those growth prospects look like as we move into 2019. I think we're seeing a couple of factors impacting earnings. The first one is that wage increases are coming through in a large number of parts of the US economy, and that's going to impact margins as we go into 2019. The second impact is that corporate America has been a huge beneficiary of the tax reductions which the Trump administration announced at the start of this year. That's very much a one-off benefit, and so as we move into 2019, that one-off benefit is going to dissipate. I think one of the other things that we are definitely seeing investors react to is some of the sort of geopolitical pressures, and specifically that revolves around tariffs. Although there have been a number of announcements, we've really yet to see tariffs bite, particularly between China and the US. But I do think that investors are starting to become more concerned about what that really means for corporate earnings going into the future. So a number of different drivers as to why we're sort of starting to see volatility emerge. And I think the backdrop to this has been that equity valuations in a lot of particularly developed economies have been particularly high. And so the margin for error has been quite low.
Great, thanks Jonathan. So if growth prospects are changing, what does that mean for markets?
It's a really good question, and I think one of the things that we're starting to see in terms of the dynamics within markets is a shift from a real focus on very strong earnings growth and the companies that benefit from that, and that's been particularly true in areas like technology, to a more of a focus particularly in equity markets around valuation and a focus on what's known as sort of value stocks. We've certainly seen those dynamics change in the last 6 weeks or so, and we think that sort of given the real sort of dichotomy between valuations in different parts of equity markets, that has got further to play out. That's important for us as investors in multi-asset funds, not just for the diversification that we see between individual asset classes, but also within specific asset classes. It's one of the reasons why when we look at constructing equity portfolios, we have real diversification in the types of managers that we use, whether or not it's in global equities or Australian equities. We believe that value investors who've had quite a tough time of it recently will actually start to see some strong outperformance as valuation really becomes much more a greater focus and a stronger driving factor within equity markets.
Thanks, Johnny. So diversification is important at the asset class level as well as at the portfolio level.
Absolutely, and it's very much at the heart of the way that we construct our portfolios for clients.
Thanks for your thoughts today, Jonathan, and thanks for joining us.